And you heard we're doing bank account management, so thank you, Kurt, Julio. Here you go. Hopefully you can all see the screen now. Kurt, can we see the screen now?
Yes.
Excellent. So again, reminder, you can go check this out, ask your questions through the question page. Download the previous webinars up here at the Resource Center. Check it out on the page. And let's go through and dive right into the agenda in the interest of time. So we're going to do a quick Treasury function overview, talk about the challenges. Julio is going to walk us through some of that. I think you'll find we'll have a pretty interactive session. We'll talk specifically about cash management, define what do we mean by cash management. I think a lot of people have different ideas and concepts around that, so we'll talk a little bit about cash management, cash liquidity, working capital liquidity and management. And then dive right into the key aspects, so bank account management, and talk about the challenges and issues and have sort of a panel discussion about that. We'll get on the top 5 Treasury customer challenges and see some of the solutions that SAP has brought to bear and hear from Kurt about a lot of those. Then we'll do a quick summary and wrap up. Why did we choose banking as one of the key areas? And we'll dive into that, but in essence, what we have found in our conversations over the past year or so with various treasurers throughout the events we've attended and our discussions with clients is banking remains kind of an opportunity and a challenge for all. Whether you're a company that's been successful and looked at having two bank accounts or bank relationships and 100 bank accounts throughout the world, or you're looking to figure things out and you have 34 different banking relationships with 1,500 different bank accounts, there's always an opportunity to take advantage of opportunity to lower costs, improve visibility, et cetera, and we'll talk a little bit about that. So Julio, this is a great slide. I love this slide. Let me turn it over to you and you can talk a little bit about, so what are we seeing from a Treasury CFO priorities perspective?
Hey John, can you hear me?
Yes, I can.
Good morning, everybody. Good afternoon. This is Julio Dalla Costa. Thank you very much, John. So from a CFO perspective, you know, PwC did a survey for Treasury and came up with the top 10 priorities. And the first one doesn't surprise me much is the access to cash. Second one, obviously in a multinational environment, there's a ton of currency risk. So that would be a very concerning point for a treasurer. The last couple would be capital structure and cash management. Now, the topic of today's webinar is really cash management. So it kind of hits on the nail here where we see what are the priorities and treasurers are focused on. Kurt, I wanted to ask you a question on this. Do you see any surprises in this list?
No, Julio. I was just looking as you were speaking there. So we have 2 of the top 4 are very cash oriented, and I can tell you that every one of my customers over the past 5 years, you know, they're very interested in how to streamline their cash operations, to view their cash position in the most optimal way, and they do strive to minimize their bank structure or reorganize their bank structure and minimize the number of accounts if and where possible, and there's many ways to do that as well. So access to cash, viewing cash, and risk are always in the top 5 for sure, no matter what year you do a survey similar to this.
Okay, great. John, next slide. So since the topic is cash management, we wanted to do a quick recap of, you know, a definition of cash management from our perspective. And really, as you can see, it's really the effective planning, monitoring, management of liquid or near liquid resources. So what does that mean? What does that mean on a daily activities basis? What does the Treasury Department do when it comes to cash management, and what are some of the activities related to that? So obviously, you're trying to control your day-to-day cash balances, whether it be North America focused or international focused. The more international you go, the more risk there is. So you're trying to figure out how much money do I have in the bank today? And that's very important because companies need to make resource decisions, and they need to have updated information, preferably real time, on where's my money, how much money can I use. If a company is abroad and they're trying to make a transaction in a certain amount of currency, local currency, it's very important to understand we have this access to our money, it's available today. And reporting, as we will see in the next couple of slides, is critical to this. Could anything you see here from Treasury is a broad definition. Cash management is sort of a funnel into that specific part of Treasury. From your perspective, do you see anything that is different from a cash management perspective, if we talk on a high level?
Yes, so Julio, you're absolutely spot on. I mean, Treasury can be defined by everybody many different ways. You could walk into every one of the companies of those who've attended this webinar, and if I said define Treasury, you're going to get, 25, 50 different versions of that definition. So Treasury, when we really speak about it, it is everything that is cash management oriented, and it is everything in managing risk, as we mentioned before. It is debt, investments, derivatives, and everything in that stream of your short-term, long-term investments, borrowings, and managing your risk. On this particular slide, I agree 100% in regard to the risks that people are captured or they're confronted with, and it's getting your daily cash from whatever source you're doing that, and the bigger footprint, the more bank accounts, the more difficult that can become. So as we go through this today, we'll also talk about how to make that better, the challenges and the tools that can make your day in the life of a cash manager more effective and efficient.
Thank you.
Hey guys, Haresh is online. I thought maybe it'd take a quick opportunity. Haresh, what's SAP's? What's your perspective on the cash management side? What are you seeing there?
Sure. Quick introduction. As I said, I have been part of the SAP and Treasury world for the last 20 years or so. One of the things I have observed over the years is that almost every topic on this slide relates to something that an organization broadly looks at, thinks about, and worries about, which is working capital. And if you look at cash, which is one of the elements of working capital, payments, receipts, all these elements are impacting broadly the working capital that an organization has in running the business. So on one hand, you can look at cash management as an isolated treasury operation, but in reality, it is not. It is part of a bigger picture of managing overall working capital across the organization. And this is exactly how we are looking at cash management and related treasury processes in SAP. All our solutions are built with an intention to be highly integrated so that they can provide a platform not just to manage niche processes, but to run an organization broadly and manage the working capital as a whole.
Mm-hmm. Great, thank you. All right, Julio.
So next slide. So as we talk about cash management, we want to talk about some of the objectives. So they may seem pretty straightforward to most of the audience here, but it's good to talk about the objectives of what are we trying to achieve when we say we're trying to manage our cash management. Obviously, as we come in here, we want to maximize our incoming funds. We always joke in the accounting and treasury industries, we're always trying to collect funds in 30 days and pay our customers in 90 days. So as Haresh correctly identified, that's the benefit of a good working capital system. If you're always collecting faster than you're paying your vendors, you have a 60-day window of excess cash. The question comes now, what are you going to do with those excess funds? Are you going to put it in a sweep account? Are you going to put it in a short-term CD? Any type of investment objective. So in that window when you're receiving cash and you're paying cash out to your vendors, that window is very important, and that's the crux of cash management and especially working capital. And having benefit of where can I earn the highest return in that period is critical. The next part of the objective, as we just talked about, is really a return on excess funds. So in that window, what is the return and what choices do I have as a treasurer or treasury department to maximize those returns? Let's not forget the back office integration. Back office integration as far as the accounting team, as far as the execution team from the treasury side. You want to make sure that your banking services are intimately integrated with accounting, because at the end of the day, we in accounting have to report this in the general ledger, and we have to make sure that there's proper integration. I wanted to just bring up the last piece here. Is I found this very neat saying is, from a treasury perspective, we want to move it, manipulate it, report it, and transmit it. And I want to bring Kurt in and get his take on that last line from a treasury perspective. Kurt, what do you think about that last statement there, Kurt?
It is very much a day in the life of the Treasury. So it is obtaining your balances through your bank interfaces. It is reporting your cash position in this particular case in SAP. It is understanding your future flows, your forecasted flows, and having that in one place within SAP, then understanding if you have the need to borrow or need to invest, and then that creates the action to move money one way or the other. So there's your move it, manipulate it, report it, and transmit it.
Perfect. Thank you so much. John? So we went from objectives. Now let's get into the crux of cash management, which is what's, as Kurt just said, day in the life of a treasurer, a cash accounting manager, a cash manager, somebody who's actually managing a company's cash resources. So the first one obviously is pretty straightforward. It's you're performing your daily cash settlement activities. You know, especially in multinational or multi-bank environments, this is a critical step because you want to make sure that all the cash coming in, the cash going out, that the treasurer and by default sometimes the CFO and the controller, that they have an accurate account balance at any given time. I think the concept of real-time reporting is really critical here, as most treasurers would know and appreciate. As that happens, you're monitoring your daily cash flows and outflows, and obviously everybody in most companies really appreciate having an accurate cash forecast. You can't have an accurate cash forecast without the ability to understand where am I at, where are my inflows coming in, when am I paying my outflows, what is the difference, where am I parking my excess cash. Don't forget about the back office wire transfers, because wire transfers, what is the process? Remember, we have Sarbanes-Oxley for public companies. What is the process of we're reviewing and approving wire transfers? And then once a wire transfer goes out, how is the reporting? Again, for me as an accountant, being in the back office and understanding, okay, we had a wire transfer today. When are we going to see the results of that in the GL? Very important. The next piece of it, which we're going to get into in the next couple of slides, is how do you manage your bank accounts? Are you going to have a centralized administration function of all the maintenance activities? Is it going to be decentralized by region? Is it going to be decentralized by business segment? It just depends on how the company structure is set up. And then obviously, another SOX concern is who are the authorized signers? It's very important who can commit a company's resources, and are there proper controls in it? Lastly, we talked a little bit about that in a couple of slides before, is how am I managing my short-term investments? So usually there's an investment board in most companies, and they give approvals of when the company has excess cash, we are allowed to do these investments, whether it be sweep accounts, treasury bills, T-bills, or what have you. I'll bring in Kurt now. So Kurt, what do you think about as far as managing short-term investments and managing bank accounts? From your perspective, what is the critical pieces of the puzzle here?
Yeah, thanks, Julio. So actually, I was about ready to jump in there and say, let's just take those three main points that you just have right there, and we'll make this a little SAP centric. And I know later in the presentation we'll get even drill down more detail on SAP. But perform daily cash settlement activities. So in SAP, we're going to call that the daily cash position. So in the functionality with SAP, this is, again, as I mentioned the previous slide, this is connecting with the banks, getting the information into SAP in a seamless and a touchless manner. You walk in, you turn your monitor on, you've got your cash position. You're actually able to see your cash balances and monitor your inflows and outflows on a very active, real-time basis. Manage bank accounts, that is bank account management with SAP, and the depth and breadth of functionality that exists there to manage the accounts, and we'll get into more of that in the coming slides. And your investments, and I would throw in debt, managing your investments and your debt, depending if you're cash rich or cash poor. That is the treasury management functionality in SAP. And so within the functionality, when you make that decision, you can make your cash position go from, for example, $25 million of excess cash. You're initiating an investment. You'll take it down, say, $20 million on a short-term investment. Dynamically, that changes your cash position to a $5 million cash position, and perhaps that's what you want your minimum balance to be. And your day is done on your cash position at that point in time.
You know, Kurt, that's a great point. One thing that I was wondering as I, hear what you're saying and I look across the globe and is visibility. Can you comment a little bit on the importance of visibility? You can do all of these things and have them 24 hours delayed. You can do them and have a view from different locations and geographies. What do you think the importance of visibility in real time is? And certainly as the globe has changed and many companies who are MNCs, their day doesn't start at 9 o'clock Eastern time. Their day never stops. It starts in Asia Pacific, and they do a cash position in Asia Pacific, and then they're moving to EMEA, and they have a cash position in EMEA, and they're moving to the U.S. So they're constant cash needs, cash positions being evaluated. What do you see as the importance of visibility and connectivity and integration?
Actually, it's a very good question, because my global customers who have reaches throughout the entire globe, they've set their cash, their visibility into their treasury activities, their cash management activities, and they, in a way that follows the sun. Mm-hmm. So obviously, the first thing in the morning in Asia, whether it be Japan or Australia or New Zealand, they have activities within their banks. They're looking at their cash position. They then may make a local decision on what to do, but as the sun continues to move and their day starts to end, they pass it off perhaps to their European group with a footprint that allows full visibility through the world, all accounts, all investments, all debt positions. They're then able to make the next decision as it's midday in Europe and look at where they are in their cash position, and then when the Americas wake up, they then can see where the current cash position, where the current decisions have been made, and can take it from there and continue. So visibility is absolutely critical, and setting up your system in a way to have that visibility is absolutely critical.
Yeah, and you'll talk a little bit more about this when we get to the SAP section, I think, right?
Absolutely.
Cool. All right, Julio.
Thanks, John. So as we go into bank account management specifically, some of the things we wanted to talk about is when you're managing a bank account, what are some of the challenges for companies that they face every day? Well, obviously there are a number of challenges concerning bank account management that treasuries are always faced with. The primary issue is the decentralization, in which a company has been acquiring banking partners and accounts when there's no reliable overview covering global bank accounts. Second is payment processing and the processing of account statements into the ERP system, lacking automation, which we always talk about as real-time reporting that John just mentioned. The third piece of it is high cost. We all know, especially in smaller banks, the high cost of transaction specific of making wire transfers, making debits, making credits to the bank account. And even though they're small costs, they add up very quickly. And complexity as well. The last piece is really documentation. So documentation and audit requirements, especially for public companies. You know, there's different bank accounts managed by different types of software solutions all throughout organizations, especially highly decentralized organizations. So Kurt, what do you think about the challenges that, you know, your customers or our customers face as they think about bank account management per se?
Well, first of all, I'd say that people underestimate the time and the effort to manage their bank structures. A lot of times through acquisitions, bank structures seem to grow, and it is rare to see people to take a step back and see can I reduce the number of bank accounts. We don't need that many if we manage it correctly. I mean, in theory, we just need one. Of course, that in practicality, that never really happens. But building it by region, by a global structure makes sense. Viewing disbursements, collections makes sense. But when it comes down to actually doing the bank account management, you look at things like what are my bank accounts, who are they with, what is the structure, what is the hierarchy, how does it flow together, do I have pooling, do I have netting situations going on in parts of the world where that's actually allowed, what are my regulatory requirements for FBAR reporting, what are my regional requirements, statutory requirements, and who are my signatories. These are all challenges that everybody faces.
What about costs, Kurt? Do you see costs being, some of these transactions, and especially if you have a lot of banks, they seem to add up pretty quickly. And when you look at the line item on your P&L, it says bank fees. Customers always seem to be complaining about how can I reduce my bank fees? How would customers usually attack that issue?
Yes, I mean, and that comes down to the efficient use of your banks and bank accounts and your bank account structure, understanding what your borrowing rate is, what your investment rate is, and what your internal cost of funds or the credit that you're going to get from the banks. But in the end, fees all relate to bank accounts and how you're managing those bank accounts. And a lot of times people just get complacent and not do a complete review of that. So my recommendation to my customers is every time they look at, say, implementing SAP Treasury, SAP Cash Management, is to do a review of their bank structure and see what they can optimize. With the right tools, you should be able to reduce your fees and enhance your cash management activities.
Yep, thank you. John, you wanted to add something?
You know, just around, I think you hit it on the nail on the head in general. Obviously, Kurt, I think one of the areas that I always look for, you know, is things where you talk about the, and I moved ahead a little bit too fast, but really thinking about the statutory issues, and people I think overlook that sometimes with the advent of foreign corrupt practices or Dodd-Frank or any of those others. I think it's important to make sure you have a system that you can audit and track results. So.
Yep. So as we move into bank account management, what are some of the goals? Well, I think, you know, obviously being an accountant, I would tell you, the first thing you want to do is you want to define a cash management policy. You want to have it written up. You want to have it documented. You want to have it vetted by the treasurer, by the CFO, and signed off. And then you want to have it disseminated throughout the organization. And everybody understands what the policy is and what the company is trying to achieve. Many times, especially in multinational environments, when you have 35, 40 countries that you're operating in and you have a country controller, you know, that treasury function is usually left up to that person in that country. And he is the de facto treasurer for that country. So you want to make sure that there's proper communication throughout all the subsidiaries, especially in a decentralized environment. Then you want to have bank relationship management, you know, who is responsible for opening the accounts, what are some of the payment processes, and most importantly, the internal controls. As Kurt mentioned earlier, having the right signatories is very important. As a good example, when I worked in Latin America, only the treasurer in the US for a multinational company, only the treasurer in the US, he had to sign off on all accounts, bank accounts that opened up. Even though he was 5,000 miles away, his signature had to be on that document because he had to be aware of all the accounts that were being opened and for what reason. The other goal, as we just talked about a little bit, is most companies, the goal would always be try to reduce the number of bank accounts and find a small number of partner banks. Why is that important? Because we just talked about the more bank accounts you have, the more fees you're going to incur. So, and then, you know, especially if you're a multinational company, some companies have specific reasons for opening bank accounts. So we want to make sure that every bank account opening is properly vetted and signed off at corporate. The next one is really setting up a global overview of your bank accounts. We will see very shortly the SAP solution. Kurt will actually show how you can see this visibility from the dashboard. I think it's a very helpful tool as we go over. The next goal we're going to talk about is having payment processes and bank statement processes. We keep harping on the point of visibility, real-time reporting. In this dynamic world where we live in today, you want to make sure, especially when you work in a multinational environment, that you always have the real-time reporting, visibility to all your bank accounts worldwide. And then the last piece is really having a centralized straight-through processing, if that is how your company will be set up, and then having a right set of approval for signature rights and account openings. Kurt, you want to jump in here and, you know, give your take on, you know, having the right policies in place as a setup for bank account management goals?
Yeah, I would say that it is something that is reviewed by all companies, and again, but I will go with the theme of the webinar today, is that a lot of times they just kind of let their bank structure grow, or grow without the central treasury group really understanding that other people throughout the world are opening up bank accounts, sometimes what they feel to be the right reasons, but not looking at the global, or not looking at the corporate policy of how they want to manage their bank accounts, their bank relationships, where their money is, and other regulatory or audit requirements. So it is a very key area that does consume time to do it correctly.
Yes, sir.
Yeah, I would agree. I think also if you add in the idea, so, you know, you guys know me, I'm always the big so what guy. And from a goals and objectives perspective, really thinking about specifics. So I would also encourage for those people listening here, and you know, we've talked, Julio, you and I and Kurt and Haresh, about specifics. I encourage everybody to think about, you know, it's okay to set up a daily overview of global bank accounts, but with goals and objectives in mind. You know, what do you have in mind? How often do you want to see them? What specifically do you want to see? Is your goal to reduce from 24-hour latency or 12-hour latency to real-time, quote-unquote, real-time visibility into your cash balances throughout the world? Reduce the number of bank accounts. I would say it's reduction / optimization. All of that, of course, depends on things like, regulatory challenges, issues in Europe like the single European payment area. All of that has to kind of combine into your goals and objectives and focus. So getting a real balance. And then finally, I think bank accounts and cash management, as we all know, are great opportunities for engagement of tools like machine learning, artificial intelligence, automated bank reconciliations, so that you can have the goal of shifting your focus from managing rote activities to doing two things. Number one, managing by exception, looking for those exceptions and routing out fraud and using tools like SAP has a business integrity screener, and we'll talk about that in the future, but tools that proactively look at fraud opportunities and monitor your bank accounts. And secondly, really thinking about how do you take your analytics forward from the view of the past 24 hours to, based on what I know in the past 24 hours, what would I do the next 24 hours, the next 72 hours, et cetera, et cetera. So, I encourage everybody to set up some goals and objectives around that too.
That's a great point, John.
All right.
So, yes, sir. So we were going to talk about why is bank account management critical for Treasury. But instead of just reading off the slide, I wanted to bring in Kurt and get his perspective, his 30 years in the Treasury space and, being a former treasurer himself. Kurt, why do you think bank account management is critical for any Treasury organization?
Well, I would go back to some of the theme that we've talked about before, in that what I've seen with my clients is their bank structure is one of those things where they don't actively manage it or review it enough, or constantly question, are they doing it the most efficient, effective way? Having a tool, many people do this in Excel, but having a tool to do this in one place is very helpful, and of course SAP does provide that. But doing it for the right reasons of understanding how you're using them, why you're using them, and always questioning why or the status quo, and not just letting it be this is the way we've always done it before type of situation. And you've also got to stay on top of all your country and regulatory requirements, for whether they be accounting or otherwise. But whether it's Sarbanes-Oxley, whether it's segregation of duties, internal, external, audit, FBAR reporting requirements, all of this are all aspects of it. And of course, reducing the number of bank accounts makes it a little easier. Revisiting your bank structure makes it a little easier. Easier said than done, but it is an activity that you should be very active with.
Thank you. John, next slide, please. So one main challenge we wanted to harp on a little bit is really understanding who is your banking partner. It's very important that we always talk about you should know your bank, and especially when you have a number of bank accounts, there's different relationships and reasons why companies open bank accounts, especially when they are in foreign countries. Sometimes it's because there's government relationships, there's government reasons that local subsidiaries are forced to open bank accounts with certain banks. Also, too, some of the large U.S. banks are not in that country, so therefore you have to have a partnership bank or subsidiary bank. So really understanding what is the real reason why we're opening this bank account, and is there a way to optimize that? So we talked about here, some companies are forced to open a bank account because they need access to that local market. Some companies have to open a bank account because it's their investment policy as part of a local government. When I worked in Latin America offshore, essentially we were forced, the company I was working for was a telecom company. The government required all its vendors to bank with a certain bank that was locally owned and was a minority stake in the government. So by no fault of the company, we were forced to open that bank account and apply with all the requirements that came with it. So really, you know, we always talk about the treasurer. He or she is really the person that has or should have at least the authority to open and close the bank accounts, which will help in segregation of duties and will foster a strong Sarbanes-Oxley environment. Kurt, when we talk about knowing your bank, what are some of the stuff that you have seen as far as working in different banks in international markets? I'm sure you have some good stories that you could probably tell. Kurt? Did we lose Kurt, John?
He's still out there. He's muted. There
Sorry,
he is.
sorry about that. I was telling all my wonderful stories, and I didn't understand why people weren't laughing. But I needed to press my unmute button. Now, I was just going to say we probably don't have a lot of time to tell a lot of stories to finish our presentation within the hour. But you know, definitely we have to take a look at the challenges that are confronted of knowing your banks within your regions, within your countries, and your requirements within those. We need to be able to make sure that we are following our policies that we have created. We have to understand the banks and banking relationships and the importance of those banks and bank relationships and the accounts. Are we just distributing our money throughout the globe to different banks to give different banks business, or are we doing it in a strategic fashion to where we are giving our banks in our credit facility our business, or our banks in our conglomerate of companies that are doing our foreign exchange risk management? Make sure that everything is strategic for you as a company, and not just having a bank because they are our local bank. It's okay to do that, but there should be a bigger strategic reason other than just that, in my opinion.
No, I agree with you, and I think the other thing is don't, you know, with no offense to our Treasury friends who are on here, I know the Treasury folks like to live in a Treasury world, but from an accounting perspective, as the leaders in lease and asset accounting for SAP as well, don't forget that you have other relationships with these banks as you're setting up your bank accounts and transfers, right? So in the leasing world, you might have hundreds or hundreds or thousands of leases. Having a relationship with a bank and being able to manage all of those also helps you out from managing your internal borrowing rates, your weighted average cost of capital. So it's not just while Treasury is absolutely crucial to the conversation, as Kurt points out, I agree, it's a totally strategic discussion. You know, I think moving through here, let's talk about, I think we'll move through the next two slides pretty quickly because we touched on these. Number one, what you want to do from a bank account management is define the policies, right? Make sure that you're very clear about what your policies are, who sets up the relationships, who manages them. Make sure that you understand what your visibility requirements are, and understand the various regulatory issues and challenges throughout the world, whether you have bank accounts in Europe and you have the single payer issues. For those of you who do business in the Middle East, remember that banks work very differently in the Middle East than they do in a lot of other areas. So you want to have a bank who understands how to work within the context of that. List your bank accounts. I think the number one thing that people don't realize is how many they have, just like we do in any other project. Go out there and take a look. Get all of those bank accounts. Find out where the payments were sent. Get them on a database and begin to understand the nature, quantity, and details around what those relationships are. Finally, optimize administrative management. Again, we talked earlier about just have a standardized way you approach both banking documentation, but also, who manages what? When do you do it? How do you do it? Who's responsible? What are the expectations? And then always, always, always take a look at the opportunity to revisit. This is particularly, I think, important in the space where we see a lot of evolution around things like cash pooling, COBO and POBO, right? So where you have collections on behalf of and payments on behalf of, that will influence how you decide to use banks in different areas, how many bank accounts you need, et cetera. And then finally, for those of you, we've talked about in-house banking. How do you manage your own internal cash, and how do you make sure that you're managing return on investment? That will also influence how you want to set up your banks. So with that in mind, what I'd like to do, we'll ease through kind of the top challenges. Real-time reporting is important. Accuracy of your information. If you have, and no knock, there are some great external non-SAP solutions out there. But if they're not integrated with your ERP, how can you be sure that the information is as accurate, timely, and integrated as you need? Reconciliations, we talk about this whether it's in revenue accounting, lease accounting, or here. How do you make sure that the foreign exchange rates are exactly the same between and among your different accounts? How do you make sure that everything is integrated? So that's another thing, and obviously integration is key to this solution. And then ease of use, and Kurt's going to show us a little bit about the new solutions from SAP. We'll ask Haresh at some point in time to chime in a bit about what makes SAP, particularly in the S4 space, relevant. But I wanted to kind of move through here and give Kurt a chance to kind of tell us about. So this is all great. We always talk, Kurt, about the what's you need to do, but gosh, I wish somebody had a solution that could help manage all of this. Maybe you can help talk about SAP and what's new.
Yes, thank you very much. Thank you very much, John. Yes, we have, in a short period of time, we'll briefly go through the SAP solution, whether it's cash management, whether it's bank account management, whether it's treasury management. SAP has a solution that covers that whole breadth of what is under the umbrella of treasury. And in many regards, we are now more so in the digital world than probably what we ever expected many years ago. And SAP's digital business framework helps SAP customers solve their complexities and their transition issues from that they may have on their existing platforms or their Excel spreadsheets or things of this sort. And it is a very holistic and integrated solution. So the slide that everybody has in front of them right now, if you take a look at in the middle, this is the core of Treasury. And within SAP, this is Treasury Management, this is payments, this is cash management, debt investments, derivatives, financial risk management, everything that pertains to that. And SAP has a solution that handles all of those areas. SAP also carries integration points to other trading platforms like FXall, like Bloomberg 360T, has integration with banks and the banking system, and market data such as Thomson Reuters and Bloomberg. So we can look at the core, we can look at the core tool that we use, but don't forget all the other connections that we need to efficiently and effectively run a treasury department. And SAP has the solution and the tools for this. We can go on to the next slide, John. One of those solutions, as we've focused a little bit on today, is cash and liquidity management. And at another time, we will have a webinar where actually we'll demo the SAP solution in a more active format. But SAP S4 HANA solution provides a visual that is template-oriented, tile-oriented, cockpit-oriented. So you have a single version of the truth of your cash, of your banking relationships. You are able to drill down to your hierarchy of banks or your cash position, and inside of that cash position, the different banks, bank accounts, currencies, real-time flow, forecasted flow. So there, you no longer necessarily need to worry about, is my cash management solution integrated? I don't need to hop or go in between different versions or different solutions or different software providers. I don't have to worry about whether or not it's going to get reconciled, whether or not it's flowing to the general ledger. All of this is contained within cash management through processing your bank statements, looking at your cash operations, looking at your near-term cash liquidity, long-term cash liquidity, your cash budget, and all your bank accounts. So it does provide a global visibility of your cash in a real-time manner. Next slide. On the payment side, we talked about some of that today. On the payment side, this is a key aspect of the SAP solution where you can actually go into your cash position. You can see what you may need to do a bank-to-bank transfer. And on the very same screen as you're looking at your cash position, you can initiate your cash transfer right there. No more going back to another T code or going back to 2-3 other clicks. It can be you're one click away. You can go to a template that you've already set up on a repetitive code, put in the amount you may want to transfer from bank to bank, hit execute. It will then queue up your payment. It will then dynamically show it in your cash position, and you have your new position right in front of you. It does allow a way to centralize your payments. It does allow you a way to standardize and reduce the number of interfaces that you have, and it allows you to help reduce your costs of minimizing your bank accounts, consolidating the number of accounts you may need globally, and additional cash extensions as we start talking about in-house cash. John, you brought that up. So from there, you start talking about your internal bank accounts, your internal structures, your pooling, your netting of funds, things of this sort. And I think do we have one more slide? We may have a couple more slides, and I want to give Haresh a time to give his perspective on this. But managing Treasury through SAP, it is about keeping and gaining visibility into your day-to-day operations. What are your policies? What are your procedures? How am I managing them? Looking at them via dashboards, effectively and efficiently managing them within SAP, whether they're cash in, cash out, borrowing, investing, managing risk, having this all in the tip of your fingers, and also keeping the integrity, the goals and objectives of your auditors, your controls all in place, making sure that payments don't go out without being approved, or whether it be one or two signatories. It is an end-to-end solution. And Haresh, I want to just pass it off to you and get your comments as well.
Sure. So the core message here is that today's challenges for Treasury are complex. And SAP Treasury needs to focus on certain principles. And our solutions are based on those principles. The three core principles are for a treasury to run in a very effective way and help the organization, you have to have the visibility that you need with insights from graphical data, graphical data that's presented to you. But at the same time, you need to be able to drill down and focus on specific areas that need attention. And that's basically the pillar number one, which is to gain visibility and insights from the dashboard, dive down to the details, and focus on the exceptions. The principle number two that our solutions are designed based on is to be able to control these processes. Once you have the right insights, once you have the right focus, you need to be able to run relatively hands-free by using straight-through processes, by having more automation, as well as being able to use the technologies of the future, which include machine learning and intelligent systems, which no matter how much we ignore, are coming and will be there and will be part of pretty much not just our business lives, but even our personal lives. And the third principle for designing our treasury solutions is to maintain integrity of your business and comply to the internal and external policies. When you're running more automated, when you're focusing only on exceptions, you want the pieces that you're not focusing on to be compliant to anything that is regulatory, anything that is part of your policy. And that's what brings in the third principle that we have used in developing our solutions. And it allows you to screen different operations, get alerts if there's something that goes wrong, monitor it, report it, and be able to control it in a better fashion.
Excellent.
Back to you, Kurt.
Excellent. Excellent, Haresh. John, can you go to the next slide? So we'll just kind of finish up our overall overview of SAP and SAP Treasury. Essentially what we're getting to is we're creating value for the treasurer, the office of the CFO. And it revolves around cash and liquidity, managing financial risk, debt and investments, and payments. So as Haresh mentioned, there are many aspects to this, but when we boil it down, we need to centralize and optimize these processes end-to-end, day-to-day cash, treasury management, financial risk, in-house banking when applicable, debt and investments, the derivative products that are around that. We want to be able to monitor and control this. We want to be able to do it efficiently, effectively, to make our payments and our bank communications so we don't have to worry about that. And we want to be able to have a solution, and SAP provides the tools to do this, to identify our exposures, and then we can take action on them. And in the end, this creates value not only for the treasurer, the office of the CFO, but the organization as a whole. We are attaining and we are getting accurate, timely views of our cash, making the right decisions, improving our cash flow, our transparency, as Haresh mentioned, as you mentioned, Haresh, early in the presentation, to our working capital needs. And it is a cycle that happens every single day. And so all of our friends on this call from Treasury understand that cycle very, very well. And I'll hand it back to you, John, to
Sure.
take us to the finish line.
All right. So thank you, guys. This was a great conversation. Haresh, as always, thank you for joining us. I think the benefits of solid cash management and banking management, number one, let's talk about data integration with your operating systems and modules. Again, the integration is crucial. It's important that you make sure that you have an end-to-end visibility. You want to make sure you're supporting electronic banking functions. Whether or not you're using, ACH, but remember that there are a lot of questions and issues and challenges coming up with regard to P cards, so payment cards, wireless transactions. How are you managing all of that? Recently in a event that I was watching, they talked about some of the new ways to pay and how Amazon is now allowing you to just walk out of the store basically with RFID on all of their goods and you can automatically be charged. How will you manage that in the future? How will that evolve? Understanding your daily cash position, real time, is absolutely crucial to companies who are managing tens of millions, hundreds of millions of dollars, and where a half a percentage point or a quarter percentage point makes all the difference in the world. Are you managing value dates, checks issued, checks deposited? How are you managing fraud? How do you secure those payments as you're going through, whether it's a banking of your payments and payments back and forth? How are you securing that data? How are you managing all of that? Even more importantly is understanding your cash forecast. Understanding not just where are you today and where were you, but forecasting, doing predictive accounting, doing predictive activities, and how do you leverage that? And then generally speaking, of course, your liquidity forecast. Expected future inflows, outflows from customers, a lot of that relates to the total picture. It's not just about the treasury function, it's about the treasury and accounting function and the payments that you're making in leasing. So hopefully, I trust that you all got a lot out of this. Look for us in future webinars and webcasts. We'll be talking more about the product. We'll invite Haresh and his colleagues to come on in, talk more about some of the things that make SAP really unique. I think it's a great new product. Kurt had a great opportunity a couple of weeks ago to go over and test it in Germany. I'm very excited about the opportunities. I'm excited about all of you joining us, and I look forward to all of you joining us in our next webinars. Have a great day. Thank you, Kurt, Julio, and Haresh, as always, for joining us, and thanks, everybody.